Imagine waking up and remembering that your money was working for you while you slept, where the jingling of coins in your pocket is replaced by the sweet sound of dividends dropping into your account. Imagine a world where financial freedom isn't just an idea, but a tangible reality. This isn't a distant goal, it's within your reach. Just as retiring comfortably means different things to different people, there are countless financial situations to consider. Some people might explore reverse mortgages, selling possessions, or moving to a more affordable place. But there's another option that is often overlooked: living off investment dividends, something that can help you earn many dollars per month. Stay tuned until the end, because we will present to you 3 quick ways to achieve this goal. And for that, you need to determine the secret ingredient to know the ideal amount of investment. So, what is this secret ingredient? It all comes down to your desired lifestyle and, of course, the numbers. The average person spends around $67,000 per year, but that might not be the right benchmark for you. You can adjust based on your specific needs, aspirations, and comfort level. Now, let's add a touch of intrigue. Imagine a life where your investments generate a consistent income, allowing you to enjoy the fruits of your labor without touching your capital. It's like having a secret money tree that keeps growing and providing for you with passive dividends. The possibilities become enticing. Remember, this journey is about finding the balance that aligns with your dreams. So, take a moment to envision your future. Visualize the kind of life you want to lead, and then let the numbers guide you toward the investment amount that will make dividends your ticket to financial freedom. In this video, we will show you how to achieve this envisioned goal. Before that, let's understand what dividends are and how they work. Imagine that you are a partial owner of a company, holding some of its shares. When that company makes a profit, they have choices about what to do with it. They can use the profit to expand the company or distribute it to the owners, in the case of publicly traded companies, the shareholders. If a company decides to distribute part of its profit to the shareholders, this is called dividends. As a shareholder, you would receive a portion of that profit based on the number of shares you own. Dividends can be paid in cash, or they can be reinvested in more company shares. Companies have different schedules for paying dividends, but many do it every 3 months. Now, let's talk about dividend yield. This is a way to measure how much you're earning from dividends compared to the stock price. This can vary from company to company and even change for the same company over time. Generally, more established companies offer higher dividend yields than smaller, newer ones. Now, to calculate the dividend yield, it's quite simple. You take the annual dividends per share and divide by the price per share. For example, if your share costs $100 and you receive $10 in dividends each year, the dividend yield would be 10%. It's important to understand the dividend yield to evaluate your investment. You can compare different stock prices and make smart decisions based on your goals and the amount of risk you're willing to take. By investing in dividend-paying stocks, you can earn regular income without needing to sell your stocks. This means you can enjoy a steady stream of money while keeping your investment intact, which is quite fantastic. It's a way to grow your wealth over time and live off the income generated by your investments. Now let's delve into the 3 strategies that can help you achieve your financial goal through dividends. Strategy number 1, covered call ETFs. One of the fastest paths to living off dividends is investing in covered call ETFs. These unique funds offer investors the opportunity to earn income from both stock appreciation and dividend payments. How does this work? Well, the ETF invests in stocks and also sells call options on those same stocks to generate additional income. Call options give the buyer the right, but not the obligation, to buy a stock at a specific price within a certain time frame. Therefore, when the ETF sells call options on the stocks in its portfolio, it receives a premium income that is distributed as dividends. Additionally, if the stock price rises above the call option's exercise price, the ETF can earn capital gains as it will be obligated to sell those stocks. There are several popular covered call ETFs to consider, such as XYLD, OILC, and EWZ. These funds offer attractive yields, often in double digits, which are significantly higher than the yields of many traditional dividend stocks. Let's take a look at their yields over the last 12 months. XYLD has a yield of 11.83%. OILEC has a yield of 11.82%, and EDWZ has a yield of 11.81%. The beauty of these ETFs lies in their ability to provide income from both dividends and option premiums, resulting in a more stable and reliable stream of passive income. However, it's essential to understand that these ETFs come with some risks. For instance, options can expire worthless, or stock prices can drop, affecting overall performance. Let's provide an example. If you have a goal of receiving $3,000 per month through covered call ETFs, you would need an investment ranging from approximately $290,000 to $320,000. That's quite attractive, isn't it? Especially when compared to traditional dividend stocks, where you would need over $2 million invested to achieve the same income level. This strategy offers an opportunity to generate a steady income stream while minimizing the required capital. So if you're eager to pursue this path, you can explore covered call ETFs as a means to fulfill your dream of living off dividends and enjoying financial independence. Now let's explore another way for you to reach $3,000 per month through dividends. This strategy involves investing in special companies called real estate investment trusts, or REITs. Strategy number 2, high-yield REITs. REITs are like teams that invest in real estate properties, such as malls, offices, and apartments. These teams make money from these properties and share a portion of it with the people who invest in them. There are some good REITs to consider if you want to earn passive income from dividends. This includes Two Harbors Investment Corporation, which has a dividend yield of 20.3%, Brandywine Realty Trust, with a dividend yield of 19.9%, and Orchid Island Capital Incorporated, with a dividend yield of 19.4%. These REITs have a track record of providing investors with a consistent income stream through dividends. Historically, REITs have shown strong performance, with an average annual return of 10.8% over the last 20 years. This means that investing in REITs can be a smart way for you to grow your wealth while earning a stable income. It's important to know that the amount of money you receive from REITs can vary, as it depends on how many people are renting the properties and the state of the economy. While REITs can provide more income than common stocks, they can also be risky when the economy is not doing well. And how much do you need to invest to earn $3,000 per month with REITs? If you expect to earn about 10.8% per year, you would need to invest around $350,000. But this number can change depending on whether you choose to invest in different REITs or just one. When investing in dividends, having a plan is important. You need to know how much money you need and what you want to achieve. This will help you choose the best REITs for your portfolio and ensure that you stick to your plan over time. Each person's situation is different. Some may be content with less than $35,000 per year, while others may need more if they have a family or aspire to a larger lifestyle. By considering the strategy of investing in REITs, you can turn your dream of living off dividends into reality. So if you're ready to take a step towards financial independence, exploring the world of REITs is a smart move. Strategy number 3, dividend aristocrats. Dividend aristocrats are special stocks that belong to a group of companies in the S&P 500 index. These companies have a unique track record of increasing their dividend payments to shareholders for at least 25 consecutive years. They are considered great options for people who want to earn income from their investments. Some of the top dividend aristocrats include 3M, Leggett & Platt, and Walgreens Boots Alliance. These companies, on average, pay a dividend yield of around 7%, which is lower than covered call ETFs and REITs, but they are very consistent in paying these dividends. Dividend aristocrats are known for steadily increasing dividends year after year. To be part of this group, a company must have increased dividend payments for at least 25 consecutive years. Whether it's a good idea to invest in these stocks depends on your own goals, timeline, and how much risk you're comfortable taking. Typically, these are large companies and are less likely to be acquired by other firms. They also tend to perform better during tough economic times, which helps them generate consistent profits. So, how much do you need to invest to reach your $3,000 goal considering a 7% dividend yield? You would need to invest around $500,000. While this might be a significant investment compared to traditional dividend stocks, which would require a $2 million investment for the same payout, it's just a fraction of the amount with the same payout. A good idea is to diversify your investments among several dividend aristocrats to reduce risk. By investing in dividend aristocrats, you have great potential to receive regular income from your investments. These stocks have a solid track record of increasing dividends, and their inclusion in the S&P 500 index adds credibility to their performance. If you're unsure where to find investment potential to increase your income, watch this video: 7 Best Compounding Assets to Start Investing in Now.